Hey everyone, and welcome to the PivotBoss Pre-Market Report for March 28th, 2016. I'm Frank Ochoa, aka PivotBoss, and here's a look at the daily time frame of the ES. Right now, what you notice is that price has been trending higher for many weeks in a row. We've talked about this before. Obviously, we had a minor downtrend here, and once we broke that trend, you can see the pivot range on a weekly basis got left behind here and then became support on every single new pullback and new high. What we've seen here since, though, is the pivot range has gotten very, very narrow for the current week, and it is an inside value pivot range, which means the current week's pivot range is inside the pivot range from the previous week. In addition to being very narrow, that means that we could see some significant movement this week. Additionally, the fact that we've had higher value relationships on the pivot range and instead have formed an inside value tells you that the uptrend could be nearing a short-term end here. If price cannot hold above the 2009 or 2000 zone, we could be looking at a significant reversal in trend back toward 1941. Being able to hold above 2000 would offer one more squeeze event to 61 to 77, and that's kind of completing our move. We talked about this bounce here having the potential to see a move back to 41s and then perhaps back to the HVN. We've almost seen a completion of that move within 20 points, so we're almost there. But if we don't reach that target, it's going to be because of a failure to hold above 2000, and that would again open up a return back to 1941. So we're going to keep an eye on this as we move forward throughout the week. Now, if we take a look at the intraday time frame for the ES here, one thing that's very significant is how prices rallied here recently. This is very important because what you see is actually how prices rallied in pre-market trading here, and what that's led to is a return back toward previous resistance here. You can see that 2041 level, very important. Let's go to a higher time frame here. Let's go to a 10,000 volume bar chart. And what you'll see is how price rallied, first of all the way into this 1941 zone. And that's kind of the highs here where it's been capping out. And after that recent drop, we've popped up and we've seen a little bit of rejection here. But 1941, if we can't get beyond that zone, everyone that got long above that area is now trapped, and we could be looking at a fierce retest of the previous week's lows at 2012, which is going to be an important level to watch. So keep an eye here on 1941s. We've already seen a significant rejection. If we cannot see any momentum above that zone, we could be filling the gap back toward 28s, and then of course moving across the range back toward those 2012s. Okay, let's take a look at crude oil. Here's crude oil in a daily time frame. This is very similar to what we talked about in the ES. You can see a pattern of higher value relationships with the pivot range here week over week. And what you see here is an overlapping lower value relationship, which tells you that the current uptrend has perhaps died down and that we could be actually looking at a potential downside reversal ahead. So one big clue here is obviously that the previous week price closed right at or below, right around the bottom of that pivot range. In an uptrending market, you typically want to see price close above the upcoming pivot range, and that would usually lead to buy opportunities and a continuation. Instead, price failed and closed below its current pivot range and right at or below its projected range. When that happens, the algos and the programs are usually tuned to selling a pullback into the pivot range for a likely continuation into new lows. You can see that's already been the case right off the top of the pivot range at 40.12. So right now, if price cannot get above that 40.12 zone, we could be looking at a push into the previous week's low, which is going to be about 38.33, with a likely continuation into the primary bear target for the week, which is 36.89. So this is going to be very important here. Additionally, you can see this little notch right here in the profile. These participants here are currently trapped. So you can see this low right there was attempting to step on that high, and then price went offered through it and is now coming back toward that zone and is becoming resistance. So if you trap these participants, this pullback and lower high here could offer a significant push downward against the current trend into this primary target and perhaps into this HVN, which is 35.17. So keep an eye on that on a swing basis. On an intraday basis here, you can see how price rallied into 40 and immediately rejected in crude oil. One other thing we see is that the previous week's close here, very important. Price rallied off that level and has come back toward that zone. So that's going to be important to see how price plays out upon a retest, basically, of this previous week's close, 39.59. That's going to be very, very important there. Any push up into the mid or the ETH VWAP could be a selling opportunity, as it has already been offered. So popping back to this area could offer a lower high for a shot at seeing a continuation into the next area of interest, which is going to be 39.32, and that's going to be the FOMC level from March 16th. So keep that in mind as well. If we look at gold now, you can see gold has continued lower. We talked about this before. We noticed how it's been very, very bullish, but once price failed to get above the 72s, we talked about rejection. We opened up a clear move into 27s, which was the first target. When we bounced, we talked about another opportunity to defend for a push across the range, and so far we've almost made it all the way back to 1191 halves. So a very solid push lower. Now I would say with this current lower value relationship here, pivot range week over week here, opening below it, closing below it the previous week, that's going to be very, very important here upon a retest. So if price bounces into the pivot range here, you may begin to see some resistance. So watch the general zone between 27.70 and 12.33.30. Any bounce into that area could offer a selling opportunity. Remember, this right here is composite VPOC, and price had attempted to hold it on several passes but went offered through it on this day. So going offered through value here is very important. Value is defended by bears. This initial rejection and then this defense could lead to a new lows into the next HVN below, which is modestly 1196 half, and perhaps much, much lower if you go to a larger HVN, which is 1126. All right, let's take a look at the NQ. Here's the NQ in a daily time frame here. We've been seeing a solid uptrending market week over week again. And then right here, we see a very narrow weekly pivot range. Anytime you have a narrow weekly pivot range of that nature, it usually implies volatility ahead. So you see this narrow range from here to here, that's your boundaries. A breakout from that range sparks a likely trending move in the direction of the break. Failure to hold above 43.55 will be the confirmation that this could be headed much, much lower, perhaps back to the previous month's close at around 41.90. So this is going to be very important how we start the week outside of 43.55 or 44.41. Initially, we're seeing a little bit of rejection above 44.15s or so, and that could lead to an early push downward. A push into 4,300 could be an area where bulls want to defend should a break of 43.55 occur. This 4,300 is very important, the top of the key range. It's also the previous month's high. So that would be an area where bulls want to defend for continuation, but below that area, it's clear air back to downside targets into 4,200. Okay, let's take a look at the intraday now. On an intraday basis, this one is very important because what you see here is the previous week, price pushed to new highs here, pulled back, and then attempted to get to new highs again and failed and dropped. When that happened, you see right about here, 44.26, you bring that across, all these participants here are now becoming trapped here. You can see obviously the drop down, and when price came back up right to that level, that support zone, that's where it's been rejected right now. Typically speaking, this is the earliest point of a major rejection and a continuation, either back toward the previous lows, but more likely through those lows. So this could be very, very important here how it plays out. Any bounce is likely to be a selling opportunity for a continuation back to 5-day VPOC, 43.94 half, and perhaps back to the bottom of value at the very least, 43.85. This is all based off of the rejection above 5-day value here. So if you're going to reject above value, the implication is a move back to value with a likely continuation to the bottom of value. So right now, we could be looking at an early rejection that leads us back toward 43.85, at least on a day basis, and then perhaps much lower as we head throughout the week. So we're going to keep an eye on this. Any push beyond 44.26 opens up a move into 44.41 with the potential to see 44.65, which is the 100% expansion target from the key range. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Good luck and trade well.